With that, do you think that we're just right now in a direction that we can't, well, it's obvious that we're not going to turn away from this, but if we don't, we can actually create the next Great Depression?
Oh, sure. I mean, look, you know, it's not just a theoretical thing with seen versus unseen consequences either. I mean, we can actually look at what's happening with small businesses right now. They're starved for capital. On survey after survey, they list their #1 fear is the threat of more importantly, uncertain regulations. They don't know what regulations are coming down the pike now. And the reason that capital has dried up for them is because we're propping up the Fannies and the Freddies and essentially the financial institutions that failed us before.
So, Stephen, you're saying that there's a limited pool of money out there, and with the government going after so much money, it's crowding out money available for other free market enterprises.
Well, a lot of capital is locked up in some very unproductive financial giants, right, which are getting themselves healthy again by pretending that their bad assets don't exist, borrowing from the Fed at near zero rates, and then lending to the government at 2 or 3%. I mean, let's start a bank, me and you. We can make a fortune doing that, you know, and so this is why would you lend to a risky startup company when you could just make money risk-free all day? When the president called the CEOs of these major banks to chew their ear a couple of weeks ago, you know, all he wanted to do was try to lecture them about how they need to go out and lend to small businesses. And you know what all they wanted to talk about was? Underwriting more Build America bonds, helping the U.S. government borrow more. Yeah. It's a safe bet for them, and you know, so that's why small businesses can't grow and can't create jobs.
Yeah, in order for business to grow, they need capital. And capital comes from savings. And there are no savings in this country. They're being diverted to the government. They're being diverted to the financial entities. And with the Fed keeping interest rates at practically zero, who's going to save? There's no return to savings. And so everybody is just going into debt. There is no capital for small businesses because it simply is being taxed out of existence.
You think the Federal Reserve needs to start raising interest rates?
Absolutely. They are too low. We got into this trouble with low interest rates. We're not going to get out of it unless we let them rise. Now, certain over-leveraged financial institutions are not going to be able to survive in a higher interest rate environment. The government is going to have to deal with its massive liabilities and the short-term nature of the national debt. But we can't have a capitalistic economy without capital. We can't have capital without savings. And no one's going to save if they don't get paid to save.
John, you agree with that? What's your formula for turning this around? Does it include the Fed actually raising rates?
Slightly. My view is I think the Fed should float the Fed funds rate. The interest rate is what intersects supply and demand for capital, and it offends me that a central bank would try to set this rate. And so the ideal thing would be for the Fed to say, we're no longer going to set the rate, let the market set it. It probably rises higher, in which case, as Peter points out, we would get higher savings as a result. But I think the biggest factor here, and this has to come from the U.S. Treasury, is that if you want job creation, you need investment, and a stable dollar is what drives investment. The U.S. Treasury must get serious about defining a dollar in terms of a value that will be the same today, tomorrow, as it will be 10 years from now. That is the #1 thing in my mind. If you want to get the economy started again, stabilize the dollar's value.
But, Stephen, how can we do that with the Fed monetizing debt and some of these programs out there? I mean, it's really a shock, in my opinion, that the dollar's not even lower.
Well, you hit the nail on the head, monetizing the debt. I mean, what the Fed is doing, it's buying mortgage-backed securities at an astonishing pace from the agencies, Fannie and Freddie, and so what's going to happen then is when they try to, that's putting liquidity into the economy. When they try to soak that back up, the only way they can do that is to sell the mortgage-backed securities that they've purchased. But it's very unlikely that they're going to be able to get full value for those. There's going to be a lot of liquidity out there that the Fed can't soak up. That's a recipe for inflation, to say nothing of the deficits that we're running. That's $1 trillion a year, stretching to 10 years.
That's the trade-off that the government is making. You can't have a strong dollar and these stimulus programs simultaneously. They're mutually exclusive. The way the government is trying to prop up the economy is by debasing the dollar, and they can't do both. So the only way we can defend our currency, and it would be great if we can define it in terms of gold the way we used to do, but that's going to immediately impose discipline on the government. They won't be able to run these huge deficits because they can't be financed, and they're going to have to back out of the financial market because that's the only way they can keep the currency sound.
So where are you then, Peter, with respect to inflation? Do you think this is going to be the big story of 2010?
you know, look, I know inflation is going to get worse in 2010, whether it's going to run out of control or it's going to take until 2011 or 2012. But I know we're going to have a major currency crisis coming soon. It's going to dwarf the financial crisis, and it's going to send consumer prices absolutely ballistic, as well as interest rates and unemployment.
What does that mean? For people watching the show, what does that mean for the average American?
It means their life is going to get a lot more difficult. It means things that they need to buy, things like food and energy, are going to be much more expensive. Ultimately, interest rates are going to rise, and their entire standard of living is going to plunge. And I'm hoping the government doesn't respond to this inflation with price controls, because that's going to make it even worse. Now you're going to be waiting in long lines to get basic food items or to get energy, because there's going to be shortages. People might be going to the black market.
You're talking Zimbabwe, Weimar Germany. I mean, you're really talking about something like that actually happening in this country.
It will happen if we don't change policies. There is still time to change. I mean, you know, I'm running for the United States Senate, so I can try to change that myself. But if we don't reverse course, if we continue to stimulate, then we will end up with hyperinflation, and it will be like Zimbabwe.
All right, guys.